Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So today's video was actually going to be on the topic of Berkshire Hathaway buying back a whole bunch of shares. They've been doing record buybacks, buying billions and billions of dollars of stock back into the company of Berkshire Hathaway. But I've thrown that topic kind of down the road a little bit. We'll do a video on that in a couple of days because frankly I've had a whole bunch of comments on an older live stream that both myself and Brad Kellner did on Sharesight growth properties. There's a few updates that have come out just in the last few days or the last week with SRG, all around their Q3 earnings release. They've had the CFO resign, and they've also had some massive movements in stock price. First, they went down about 18% when they reported earnings, and just overnight, my time here in New Zealand, they've gone up about 28%. So I want to talk through all the updates with SRG, give you my thoughts on the matter, so I hope you enjoy. Now, firstly, just an update on SRG, firstly the company, and then also sort of the investment case. So Sharesight Growth Properties is basically a REIT, a real estate investment trust. That's a kind of entity that is set up to basically eventually produce a lot of cash flow and then pay essentially all of that out as dividends to shareholders. So SRG originally got spun out of Sears a couple of years before Sears filed for bankruptcy, and SRG has sort of operated as its own separate entity ever since then in about 2015. So Sharesight Growth Properties has a large sort of diversified portfolio of different real estate investments. They own anything from malls and shopping centers to multifamily real estate, which they're looking to get more and more into. And basically SRG has, for the past few years and for the probably next few years as well, are going through this sort of redevelopment timeline. So they're looking at each of their individual real estate investments. They're saying if we redevelop some of these properties, we can potentially get many multiples of the current rent that we're getting. So we can, increase our rent from say $4 a square foot right up to as much as $18 a square foot, which they've, proven with many of their properties. So they're looking at redeveloping the properties where the economics look attractive, and then they're selling off any properties where redevelopment opportunities don't look so attractive in order to sort of fund the rest of the business. Currently, they're still right in the midst of all this development and cash flows are still negative. And this one came on my radar initially from Monis Prabrai making an investment. So he went and put in basically a full kind of 10% bet of his fund into Sharesight Growth Properties. It's also got investors like Guy Spear and Phil Town, Warren Buffett personally all involved, as well as Eddie Lampert, another well-known value investor, being in there, and as well as Berkshire Hathaway actually providing much of the debt to Sharesight. So there's a few big names in there, and in terms of the investment case, I actually did a live stream on this with Brad Kellner. If you haven't already seen it, I definitely recommend going and checking that out. That goes through right kind of start to finish of what we think of SRG, and also has some really cool valuation work that Brad actually did on SRG, where he basically identified that if the business was to liquidate today, the cash that would be returned to shareholders would be greater than the market price. In his opinion, not investment advice from either of us on that one. So that's kind of where we got to with SRG. So I think let's just get straight into some of the recent updates, and let me give you my thoughts on that. Okay, so here are some of the third quarter updates from SRG. So for the 3 months ended September 30th, 2020, net loss attributable to common shareholders of $51.3 million or $1.33 a share. Total net operating income or total NOI of $6 million. Funds from operations of negative $19.9 million or negative 36 cents per share. Company funds from operations of negative $25.1 million or negative 45 cents per share. And for the 9 months ended September 30th, 2020, net loss attributable to common shareholders of $74.3 million or $1.95 per share. Total NOIs of $29.1 million. Funds from operations of negative $64.8 million or negative $1.16 per share. And company funds from operations of negative $70.7 million or negative $1.27 per share. So firstly, on some of the kind of high-level business updates out of SRG, frankly, this is expected. We expect that SRG will have negative earnings for probably the next few years at least, and until they can get these redevelopment projects largely ticked off and get to more of a sort of positive cash flow state. So largely expected. I think something that I'm going to focus on largely in these financial updates is a couple of numbers. So the net operating income is going to be important because that, as more redeveloped properties come online, should be increasing kind of quarter over quarter. And the other thing is basically the cash and debt position of the business. So in order to fund these redevelopments, they are selling properties. They also have debt that they owe to Berkshire Hathaway, and they can actually extend that line of credit a little bit further if they need to and if they hit certain targets. So those are kind of the main areas that I'll be focusing on. But I will say most of the numbers coming through here are largely kind of as expected, as they're still kind of going through this transition phase. Okay, next up we have a business update as of October 30th, 2020. So approximately 95% of in-place tenants, representing 97% of gross leasable area and 95% of annual base rent, were open and or operating, including 265 stores that were fully open and 5 stores that were open for pickup and or delivery. Rental income collections were for Q2 2020, they collected 70% and agreed to defer an additional 25%. Q3, they collected 86% and agreed to defer an additional 10%, and October 2020, they collected 86% again and agreed to defer an additional 8%. So generated $284.4 million of gross proceeds through monetization activity year to date, which is basically selling properties, including $113.6 million during the 3 months ended September 30th, 2020, and $11.8 million subsequent to the end of the third quarter, and had asset sales under contract for anticipated gross proceeds of $62.5 million, subject to buyer diligence and closing conditions. Okay, so there are a few things to unpack in there. So firstly, let's talk about the rental income. Basically, over the past several quarters, as you know, a lot of businesses have been struggling, particularly those in a retail area that have to operate a physical store and all that sort of thing, which SRG basically operates as the landlord for in a lot of those businesses. So it's fantastic to see that the rental income is continuing to recover, and SRG, if you include those sort of deferred agreements, is now collecting very, very close to 100% of their rental income from existing tenants. And I should also mention that that big drop in rental income a couple of quarters ago is one of the main reasons why SRG has gone down so much over the past several quarters. So it went from about $50 a share all the way down to about $6 a share. It's back up to 12, 13, 14, somewhere in that range now. So it's great from an SRG shareholder perspective, that being me, to see that rental income, continue to recover. And again, as we'll talk about shortly, these redevelopment opportunities get a little bit more back on track. We also saw a continuation of SRG selling properties, sort of non-core properties that they don't see as attractive redevelopment opportunities. So that's kind of expected. The thing that did interest me a little bit more here is the cap rate that was mentioned. So in the past several quarters, SRG have been selling properties around a 6% cap rate, basically right on a 6%. That's actually dropped down slightly to 5.9%, which in practice means that SRG are receiving a little bit more cash. They're actually getting paid slightly more for their properties. So buyers are willing to only receive a sort of 5.9% cap rate for those properties, so they're paying a little bit more. So 6% down to 5.9%. It's not a massive increase, but it's sort of heading in the right direction. If you want SRG to collect as much as possible from selling each of their real estate investments that they choose to liquidate. Now, I'm not going to read through the entire earnings report on this video, so I will leave a link down in the description if you're interested in reading through the whole thing. But there's a couple of other highlights that came out of the earnings release for me. So the company has $120.9 million in cash on hand, which is fantastic. And they're also under contract for about another $62 million pending due diligence from those buyers of that real estate. So that was where the business was at cash-wise. On the other side of their balance sheet, they still have their arrangement in place with Berkshire Hathaway. And the final bit of info they mentioned is that in terms of dividends, the company's board does not expect to pay a dividend out to common shareholders in 2020 unless they absolutely have to keep their REIT status. So there are some rules that are in place for real estate investment trusts where they they have to pay out a high percentage of their earnings in order to maintain that real estate investment trust status and get better tax treatment and so on. But SRG simply does not have the cash to pay a dividend right now. They want to prioritize it into redevelopment projects. So they will only pay a dividend if they absolutely have to, is basically what they said. So if you're looking to invest in SRG in order to get a dividend over the next couple of years or anything, I think you're probably gambling a little bit with that one. So in summary, for the earnings release for SRG, everything that I saw there was kind of expected. Their rental collections continued to recover from, a couple of quarters ago when a lot of their tenants were really struggling, and frankly, many of them still are. I don't want to discount that too much. So rental collections continued to improve. They continue to redevelop the properties where they think they can get the best sort of internal rate of return. They continue to liquidate some of the properties where they don't think they can get a good return, and they're kind of just chugging this engine away and continuing to bring more and more properties online. So nothing really jumped off the page to me as super surprising, but it's certainly going to be a business we have to continue to watch over a period of time. Now let's talk about the final big update with the CFO resignation, which is potentially the reason why the stock went down quite a bit on Friday. It's a little bit hard to say. Earnings release and the CFO resignation kind of came out at the same time. Stock was down 18%, and then just overnight, New Zealand time, was up 28%. So who knows? But basically, this is the news release that SRG put out. So on November 3rd, 2020, Brian R. Dickman, the Executive Vice President and CFO of Sharesight Growth Properties, notified the company of his resignation from the company to pursue other opportunities. Mr. Dickman is expected to remain employed by the company through a transition period. Mr. Dickman's departure is not based on any disagreement with the company's accounting principles, practices, or financial statement disclosures. So the CFO has resigned, and frankly, from my perspective, that doesn't really explain why. They always say they're going off to pursue other opportunities. If something bad is going on internally in the company, they're never going to tell us, frankly. So I have had a lot of DMs and a lot of comments about this particular resignation, and I know about as much as you guys commenting on the video. So I don't really know what's going on. That's literally all the information I have. Unfortunately, I can't get on the phone to the CEO and ask him. And even then, I don't know if he'd tell me. I'm not too sure. But it is an important note. So potentially something to keep an eye on. What I will say is one of the things that did come up in the live stream I did with Brad a couple of months ago was actually some of the insider trading transactions. So if you go on a website called Open Insider, you can search any sort of US public company and you can see who's been buying and selling shares. And basically this CFO who has just resigned was actually pretty much the only recent transaction in there in terms of insiders buying and selling. He was actually selling a few shares. I believe he did that in around September. So this perhaps explains what was going on there. I think that frankly is probably a positive sign, if I had to guess a little bit and look into my crystal ball, that perhaps he was just looking to, liquidate his shares in the company before he left the company altogether. So interesting, and something to keep an eye on, especially when the new CFO does come on. It will be interesting to see what their background is and how they kind of influence the company going forward and all that sort of stuff. And whether they have different policies on managing debt or how they want to kind of run the business in conjunction with the CEO and the board of directors and all that sort of thing. Management does have a huge influence on the results of the business. So something to keep an eye on, but that is all from me today and all the updates that I have for Sharesight Growth Properties. Keep an eye out on the channel because I will go and do that Berkshire Hathaway buyback video that I was talking about. I think that's a very interesting topic as well. But I thought the SRG updates were a little bit more pressing. So I do hope you enjoyed the video. If you did, please hit like, hit subscribe, and I will see you in the next one. Cheers. Mo check.